welcome to another Major Market Movements End of the Week market review for May 29th, 2015. I'm Quad G, and in this video we're covering the PM complex. Starting off with gold here, we've got the week closing fairly close to the supporting trend line, and so far not a strong indication of a reversal just yet. There was yesterday a small hammer candle, and we're getting just a little bit of fall through today, but for the most part, nothing very strong here. The QG3 is back into a bearish alignment to the downside, and you can see that today looks like we're going to close just underneath the 3 EMA today. So that's another indication that things are not rosy from a bullish perspective here. I would say we're in a kind of a bearish to neutral trajectory. Can things turn around here? Sure they can, but I would want to see a bit more evidence of strength coming back into this market. Gold on the weekly, again, we're closing down negative, well below last week's low, and it looks like we might be closing just underneath the open that previous strong positive candle to the upside, which opened up at 1189.88. We're just a tick over above that right now. The EWO here is flat. Nothing to show you there. The RSI, we come down here and we're still floating just above that 40 line. We might see a test of it next week with one more push lower. It's hard to say, but for right now, we're right in the middle of that very mushy neutral area between 40 and 60 still. And gold on the weekly, MACD is still open to the upside. And on the daily, we're open to the downside. So overall, it's just a very mixed picture, slightly bearish to neutral for the gold market. Silver. All right, silver here. I've got a lot of old trend lines here, but this supporting trend line here, you can see we're violating that. We're not getting a really sound bounce out of it. Yesterday we did see a small bullish hammer candle, but today no serious follow through, just some more sideways chop for the most part. The QG3 is pressing back down here and not in a neutral alignment with the 10 EMA still above the 20, but you can see that's coming down quickly, and if we don't see any serious movement to the upside, it's very possible that early next week we're going to see that 10 EMA close underneath the 20 and produce another bearish alignment to the downside. So overall, just a neutral picture here for neutral at this point in time. So weekly, we do close underneath last week's intra-week low there, so that's bearish. The EWO, again, really nothing to show you there. The RSI, we're right smack dab in the middle at the 50 level, so neutral. And so over on the weekly, and the MACD is open to the upside, and on the daily, open to the downside. So again, just in this very tedious neutral spot here for silver at this time. Let's take a look at platinum. All right, so platinum on the daily, looks like we are continuing to see daily closes that are deeper and deeper here. It's possible if we do see a turnaround, we may backtest this breakdown point of that previous trend line. There was a solid breakdown with no back test of it right around the 1131 level. So if the current downtrend does lose some of its momentum and we get a corrective pop up, that would be the first spot that I think we could see potential resistance as a back test. The MACD is, or excuse me, the QG3 is still open to the downside, bearish alignment. The 20 DMA dipping, starting to curl over and head back down again. You can see that the Bollinger Bands were previously pinched a bit, and now they're spreading out, flaring to the upside and downside as we press lower. Platinum on the weekly, solid weekly close lower, lowest weekly close in a long time. Let's see if we go back here. You'd have to go all the way back here to somewhere in the middle of 2009 to get a weekly close as low as this one. So that's looking bearish. Platinum on the EWO. Again, not much to show you there. Very neutral. Platinum on the daily. RSI here. We've dipped below the 40 level, as you can see. Here's the 40 line. We've dipped below it and no sign of a bounce whatsoever. So it looks to me as though this 40 level is cracked and it could allow for a dip back down into the 30 or 20 level to come. Platinum on the MACD daily is bearish to the downside. And on the weekly, we're still, believe it or not, we still got a bullish alignment to the upside with the signal line above the baseline there. Still, even though in the weekly, even though we've seen this recent sell-off. So it looks to me that neutral or platinum is looking bearish here, and I think it could be heading lower, especially if we keep below this week's open, this area right up here at about 1142, 1130-ish, something like that, somewhere in this area. We keep below that on an intra-week basis. I don't see why we wouldn't continue to see more selling to the downside. Pop up above that, and it could be a game changer. All right, let's go to the Elliott wave charts. I wanted to point out, here's the gold moon phase chart. And recently, over the last few months, well, let me back it up here. For a while during this uptrend, we could see that the moon phases correlated with the tops and bottoms fairly well throughout that uptrend. But since this top, a number of moon cycles here have been not very indicative of tops or bottoms. So they just basically happening before a bottom or before a top or in the middle of a trend. Not much usefulness out of it, which is unusual. Usually the moon phase is pretty darn accurate. It's been, previous calculations, it's been accurate of predicting a top or a bottom about 70% of the time. And but through this stretch, it wasn't doing a very good job at all. But recently, you can see here at this full moon, we did see a bottom with a move to the upside, and then we did see a top here with this new moon recently. And the full moon is coming up again. I believe it's Tuesday next week. And so that if gold's getting back in sync with the moon phases, Tuesday next week could be a place to look for a potential bottom in plus or minus a day. So say Monday, Tuesday, Wednesday, something like that. Actually, it'd be Tuesday night, so you'd be looking at Monday, Tuesday into Wednesday be into Thursday. So basically, from Monday's close into Thursday's close would cover that full moon turn window. So we'll be watching to see what the market does there. I regard the moon phases here as more similar along the lines of seasonals. They can be overrun with strong trends. Basically, the market just completely ignores it during a strong move, or very choppy neutral areas too. Certainly, I've seen that right in here. So it's not something that you want to, ultimately rely upon, but it can give you a little extra boost if the other technical analysis is following along with, say, candlesticks or Elliott wave into a particular turn date in the moon cycle. That moon may give you a little bit of extra boost when applying it to your other technical analysis tools. So let's see, let's go here. All right, so here's my foremost bearish count for the midterm. It would suggest that we've just coming out of a ABC 335 contracted flat count in 2014, ending in early 2014, and since then we've worked on this very slow, choppy grind to the downside that may still need one more leg down to finish the pattern, with wave 5 being another 3-wave move. And so I'm tending to favor this count because it's really difficult to find a good bull count out of this unless you get a truncated fifth here, which it still is possible. I just don't lean that way at this point in time. So this count looks the most likely while we remain below 1214 or 1215 at this time. Poke up above that, and that might change. That might change the probabilities enough. We'll see. Let's see here. All right, so here's gold. Same count, just zoomed in. I got the ABC finished, and now working on this wave C to the downside. And this looks like maybe a wave 1, a wave 2, maybe a wave 3, maybe a wave 4 working on here, and another wave 5 to the downside into early next week. Could come all the way down here, I think, to the 1170 or even lower level, possibly, and then bounce back up into a corrective wave, possibly. Again, the key resistance for right now is at 1214 level. Bearish below, potentially bullish above. All right, so here's silver. This is the breakout that we were looking for. That we got the breakout. Now it looks like we could be working on a back test of this long-term blue trend line that started all the way back here in 2012. And if we zoom in on this, you can see that we got the pop above it. We've got this move to the downside. It looks like it could be a back test of the blue trend line. If this is true, then we're going to need to see that back test succeed with an impulsive move right back up here, preferably engulfing this week's downward candle. Anything short of that, we continue to chop sideways or close on a weekly basis next week underneath that blue trend line, then it looks like this rule of 4 breakout may just be end up being a false breakout. And this market's going to want to continue to chop sideways and downwards more than likely before advancing up. I do think at minimum this could be a warning shot anyway, that even if we do get a lower low in the price, that trend line looks vulnerable with this pop above it, meaning that even if we do get one more move to the downside here, the next time we come up and break that blue trend line, it's more than likely going to be a stronger advance if we don't see it here and now. All right. Okay. All right, here's my silver count. This is the one I still favor. I think it still has potential. But we're not seeing the really strong turnaround just yet. Just some more choppy sideways movement. Very neutral. Just going to have to wait and see on that one. On the QG3, on GDX here, we're back into a bearish alignment, which previously I did not expect to see. I was thinking that we might get a back test of the 20 and shoot higher, and obviously the market wasn't going for that. We've since penetrated through the 20. We've got the 20 DMA curling back over and down again. So this is looking like a bearish picture. We got you can see that the 10 EMA was respected as resistance today with intraday move higher, but a rejection moved right back down. So looks like we're closing, or we did close, excuse me, right there at the 3 EMA. So nothing bullish here at all. That's definitely looking bearish to me with the QG3. The weekly closes last week, we didn't get the inside Q reversal. We did see some fall through this week. We got a gap down, but that gap down just stalled. We didn't see a complete capitulation, sell down here. We basically get this stall. We get this little spinning top for the week. Now, I've seen other examples of this kind of behavior where you get a gap down and stall. It acts somewhat like a bullish harami, but there's really nothing to do with it as it is. We're going to have to see if next week we see a gap up, then this could be an abandoned candle. If we get a gap up, more or less an island reversal, and a one candle island reversal. A typical island reversal is more than 1 day, 2 or 3 or 4 or 5 days. But as it is, if we do get a gap up on the week, that would potentially be bullish, and but we close, if next week closes down, or even an intra-week move down below this week's low there at 1915, that's going to look particularly bearish as well. So I would say this little candle here is more or less neutral. It's not particularly bearish or bullish at this point in time. The uptrend, we were cooking along here really nicely, but we stalled right here at that orange trend line, as you can see, and we've doubled back here, taking out the last swing low, and right now we've created a new lower low, and now we're looking to see if the price will come up, maybe back test this breakdown point at about 1988, or maybe even come up and do a formal back test up here of this orange trend line. And if we see a rejection there with an inverted hammer candle or something like that, then that back test may succeed and we may see another plunge to the downside. Yeah, I would say if we came back up here and we took out this previous gap high, closed above that, that would be a good indication that maybe we're not going to capitulate. We might actually recover some if we were to see that. So, and now obviously a close above that gap open there would be back above that orange trend line as well. So it would indicate to me that this was just a false breakdown. But as it is, I think we should respect it as a new lower low, which means that the next bounce up could be a new lower high compared to the last swing high, and which would mean we could be starting a new downtrend. GDXJ, we got the rule of 4 breakout. It could be that this week's move just came down to give a back test of the breakdown point or breakout point there at the $25 level. But again, no solid turnaround. This could be like an outside harami candle, in which we would need to see next week come up and preferably close at or above this week's open, and that open is at 26.92. If we see that happen, that's a good indication that this bottom is sealed in and we could advance higher. Anything short of that, though, we get a close next week underneath this week's low. That's just going to be bearish, and my expectation is we'll see the price come down and give at least a formal backtest of that blue trend line. Somewhere down here, considerably lower, right around the $23 levels, looks possible. Okay, so I understand that to sum it all up, the PM complex is just in a very tedious neutral space right now, and it's really difficult to tell whether we're going to see a turnaround here or not. I think it's best just to watch and wait, and don't get too excited about getting in one way or the other going into next week. So, okay, that's going to cover or end our coverage of the PM complex for this week. Hope you all have a great weekend, and we'll be talking to you later. Adios.